Everyone, so welcome to the second part of the ABC webinar series on managing change. So today we are talking about crisis management. So given these are all quite a lot of content to get through in our short, sharp half hour, I shall move straight onto the pack and share my screen, and I will then introduce our guest speakers we have today as well. Right. Hopefully you can all see that. Carrie, Ian, is that kind of popped up on the screen?
Yeah.
Perfect. Okay. So it is crisis management today. Those of you who joined us for the first session, that was about the mindset and what we need to do differently. And I said there's a 3-stage process we go through on that. But before we go into that, I just wanted to introduce my co-speakers today. In fact, they're the main speakers today. So we have Carrie Campbell and Ian Pilbeam. Carrie, Ian, if you'd like to maybe just give a quick 20 seconds on each yourselves. Carrie first.
Okay, yeah, good morning everyone. Yes, I'm Carrie Campbell and a partner with Thomson Cooper Accountants, and I work predominantly supporting SMEs with accounts and tax and planning.
Okay, great. I'm Ian Pilbeam, CEO of the HR department here in Edinburgh, sunny not Edinburgh, and in peacetime we provide outsourced HR support for SMEs and health and safety as well, so contracts, handbooks, disciplinaries, absence, all that sort of stuff. But for the last 5 weeks, it's been all about coping with reduced cash flow in businesses in terms of workforce, and for the last 3 weeks, learning all about this new word called furloughing. We'll find out more later.
Perfect. Thank you both. So moving on, today's session is all about crisis management, and then we'll move through into stabilization, and then the week afterwards into moving our businesses forward. So I'm going to give a very short preamble, but then the lion's share of today will be Carrie, then Ian, and we'll have 5 minutes or so at the end for Q&A for yourselves. I'm sure there'll be lots of questions for the combined expertise of Carrie and Ian to help with. So first up, if you think, what is a crisis? Well, the classic red alert, it's all gone wrong. So crises, they're something that's sudden, severe, and unexpected. So it's not going to be something that's on your risk monitor. It might be something that you've got in your business continuity plans, but we won't know exactly what's happened. It's genuinely things which we just don't expect to happen. The severity part means it's something which threatens the very fabric of our existence, i.e. we may or may not be in business after this. So therefore, it's survival. And from a business point of view, survival is all about cash flow. Cash flow is what will actually ultimately put us out of business. Even if we've got a really strong pipeline, if we run out of cash, we're gone. So I wanted to create a little bit of an analogy. I was thinking of the Titanic and hitting icebergs and trying to keep afloat, but we all know how Titanic ends, so I didn't want to use one with a preset ending. So I've gone for the hot air balloon and the mountains looming. So we need to get over the mountain or we'll crash. And the beauty of the hot air balloon, it actually has 2 aspects you can do to resolve that. So one, we can jettison some of the cargo and actually lose weight and help ourselves rise that way. Or secondly, we can actually turn on and pump more air through into the hot air balloon. And from a cash flow point of view, that's the same piece. So there's 2 ways to help cash flow. One, we can actually put more fire in, and that's actually getting more money into the business. So doing sales in some way, shape or form. The second part is we can actually lose some of the weight, and that's looking at our costs and how we manage that. And these are the 2 ways that we get ourselves forward. So at that point, I want to then move over and hand over to Carrie first, who's going to talk through some of the opportunities we've got from the government in terms of helping us on both these sides. So if I stop sharing my screen, Carrie, you should be able to share yours.
Hopefully. There we go. Okay, so did that work? Everyone see the screen?
Perfect, Carrie.
Yeah. So yes, so just to follow on from that, obviously there's been lots of headlines and lots of different schemes bandied about, and everyone has become confused. And in crisis mode, it tends to happen more. So today I'm just going to cover exactly what is out there and available. So I'll touch on the Self-Employed Income Support Scheme, the Small Business Grants, the CBILS, any opportunities for deadline and payment extension, and then I'll lightly touch on the Job Retention Scheme, and then Ian will pick up in more detail about that moving forward with his presentation. So, Self-Employed Income Support Scheme. So this is a taxable grant, and it's worth bearing in mind that it is taxable. So what many people have probably not picked up as well is that if you do receive this, which is be 80% of your trading profits up to a maximum of £2,500 per month, you have to declare it both in your tax return going forward and if any of you claim tax credits. So that's one thing to bear in mind if you end up being in receipt of this. So this self-employed income support is just for sole traders or partnerships. You must have submitted in 2018-19 self-assessment tax return. And if you haven't, and you did actually have self-employment, you have until the 23rd of April to get your 18-19 return in order to be able to apply to the scheme. You must have traded throughout 19-20 and still have been trading had it not been for the current COVID-19 crisis, and that you will continue and intend to trade for 2021. Self-employed profits, so they must be under £50,000 in order to qualify, and your profits must make up over 50% of your total taxable income. So what that means is that if you also have an employment income, you have dividend income, you need to look at your last 3 years tax returns and work out if your self-employed profits make up over 50% of your total taxable income over that 3-year period. And unfortunately, this scheme for the self-employed does not cover owner-managed limited companies. So i.e. if you operate through a limited company solely yourself, you do not qualify for the self-employed income. There is also a bit about it in finer detail that you can continue to work, provided it's safe to do so. However, a loss of income must occur to enable you to actually continue to work and claim under this scheme as well. So, how will I claim? Well, the key thing is to sit tight. HMRC will contact you based on the self-assessment entries that you've made and submitted previously. Likely that this will be via a letter, and you'll be invited to apply online through the gov.uk website. What I would warn you is please beware of scams. They will not contact you by email, they will not contact you by text and ask you to follow a link, because there's already been some motions and some emails sent under that VISO. When we're in a crisis, unfortunately, fraudsters take advantage. It will be eventually paid direct into your bank account, but we don't expect any movement on this scheme until June 2020 at the earliest. So for some of you, that is still a long way off, so you need to look at avenues such as universal credit meantime to get you through, or potentially the business interruption loans, which I'll come to further down the line. What else is available? So we've got small business grants, and this is just the legislation that applies to Scotland, because Scotland and England are different in this spectrum. So if you operate a business which is classified in the retail, hospitality and leisure business, then you'll be getting 100% rates relief during 2021. So you face not paying any rates during that year. You can also, if you're in the retail, hospitality and leisure, apply for a grant. So that's facilitated through your local authority, so your council, where your rateable value of your property is between £18,001 up to and including £51,000. So for any of you, I would urge you to look at the non-domestic rates coronavirus shortcut on MyGov, because there's actually some people that possibly don't realise that they fall into the retail and hospitality and leisure. So there's a vast list that's available, but some of the ones that I've come across that people weren't aware of was like car washes, clinics. So there's a bit of what's that? So that could be a physiotherapist, something like that, because clinics is quite broad. And also they've recently introduced, after a bit of an uproar, that self-catering accommodation could also apply into this sector, but there's set criteria around that. So you have to have let it out for 140 days in 1920, and it has to make up a third of the income of the ratepayer. So just little tweaks that they've been adding to as we go along, that are obviously not banded in very much detail in the headlines. Then if you move down to the businesses that don't sit within the retail, hospitality and leisure sector, they can apply for a £10,000 grant, provided you qualify for the small business bonus scheme ordinarily within your rates bill. So this is for premises that have a rateable value of £18,000 or less, or if you have more than one premises, a total of £35,000 or less. Another thing to be careful of when you come to report it down the line is that both of these grants are taxable as revenue. So they will be included in your income calculation for future tax purposes. Now we move on to, so if you've looked at your cash flow and in your crisis management, you've looked at the short term, so you've spoken to your customers and understood if there's going to be any interruptions around the cash that they plan to pay to you. You've looked at your longer term, so what you need to funding wise to help your business survive. And basically I would be looking at as well, before you think of the coronavirus business interruption loan, what will I need at the other end to get my business up and running and back to its full potential once we come out of this. And then once you've done that, you can look at applying for a business interruption loan. So this is available to UK-based businesses with turnover of less than 45 million. You have to have been a viable business if it were not for COVID-19. So that's open to many people's interpretation. And you have to self-certify that you've been affected by this crisis. So they're not going to be out to prove how your business, it's basically you just giving them a story around what's happened, how you've been affected, and what the likely outcome will be. Now, like any application to a bank, it's not simple. It varies from lender to lender, but I think the most prominent thing that people should realise is that the likelihood is you'll only get it from your existing bank. There's no appetite within the banking community or the high street banking community for new lending to new customers. They're basically firefighting, trying to deal with their own customers before thinking about winning new business. It varies from bank to bank what you'll be asked for, but there is potential in addition to the actual physical completion of the application form, which is available online at most of the banks, management accounts, potentially cash flow forecast, although they have relaxed that a little bit with certain banks over the last week. Business plans, so nothing in depth, just basically the directors or owners' viewpoint as to what they see will happen. Obviously historic accounts, so most up to date the better. Details of assets, so that would be company assets or sole trader assets of the business, so that if there is any potential, they may look at doing it through asset finance rather than an actual term loan. And then in the last week, we've seen the main four banks commit to removing the personal guarantees that were initially requested, and that there were some headlines through the media for loans of under £250,000. So they've made a commitment that they will remove the personal guarantee requirement. Okay, and then lastly, other things that you can do in order to help your cash flow. Well, this doesn't help your cash flow, but just for you to be aware, in case you're running around trying to get your accounts done, that there is a Companies House have allowed a 3-month extension on the deadlines for filing accounts, but that you have to apply for it, so it's not automatic, so you've got to go onto the Companies House website and apply. Any VAT payments that were due between the 23rd of March and the end of June have been deferred, and you are being allowed to have until the 5th of April 2021 to make those payments and agree payment back. However, you are expected to file your VAT return as normal So beware, make sure you cancel your direct debits, otherwise it will come out automatically. Self-assessment payments, well, they've moved the payments that were due or are becoming due at the end of July, and you can now defer these until January 2021. But I would urge you to look at your cash flow, because this is just going to move the problem on, and you may see a chunky bill in January 2021. Time to pay, so for other taxes, for PAYE and corporation tax, they are being very receptive. For every client I've had that's phoned and asked for a time to pay has basically had it granted, and I've put in there the helpline number to do that, and to make you aware, because the challenge that many people have had is actually getting through, but be aware they're open till 8 o'clock at night and Saturday morning, so we find it's easier to get through 8 AM and on a Saturday is how we've found it. Okay, and then the job retention scheme. So the job retention scheme is applicable to that magical word of furlough that Ian will go into many detail about. The claim portal will open on the 20th of April and payments should be expected shortly afterwards. Aid your agent, so your payroll agent, provided that they've got a 64-8 in place for payroll, will be able to apply on your behalf. Glance over, payments can include any regular payments you're obliged to pay, but Ian will cover that in more detail. And what I would urge you as well, to ensure that your paperwork is in order for the eligibility of the grant, because you have to keep that paperwork for 5 years, so that there is going to be scope moving forward that they will audit these claims. You can claim 80% of the salary up to a maximum of £2,500 per month. The claim for the employer can also include employer's NIC and pension, but only for the statutory minimum of 3%. And the key thing is, as part of the claim, you cannot ask your employee to do any work for your organisation or provide any services. Okay, well, I think that's me, so I'll pass over to Ian now, who will take you through in more detail from an HR perspective.
Thank you, Carrie. That was very insightful stuff.
Okay.
If you
Share
your screen.
Yeah.
Great, I am just doing the technical bit, and all being well, you can see that.
Yeah.
All good, great. Morning everyone, happy Easter. Hope you've all got your hot cross buns ready. I'm off for a Bloody Mary after this, and a well-earned break over the weekend. You'll see this slide is named Updates to the Coronavirus Job Retention Scheme, because we've gone in a number of phases here. So it's 3 weeks ago today, I think, that the Chancellor did his press conference and announced this big word, never heard it before, unprecedented wage subsidy scheme, where the state was going to step in and pay the wages of people who would otherwise be made redundant. And we lived for a week trying to work out what that all meant on the basis of 4 sentences on the .gov website. And then 2 weeks ago last night, they launched the detailed guidelines on the coronavirus job retention scheme, which I have here. And then, because they don't like HR people very much in the Treasury, on Saturday afternoon last weekend, they launched version 2 of the coronavirus job retention scheme, which I have here. And this presentation was based on that on Monday morning, and I've been delivering it all week. They really don't like HR people who decided that after all of this, they needed the long Easter weekend, because yesterday evening, they launched version 3. Here it is. So what I've done is I've updated the presentation to take account of some of the changes that were released last night. They're mainly technical, to be honest. I think we know a lot of what we're going to know now, but there are still some unknowns. So who is eligible for this maximum £2,500, 80% of wages claim? Well, the employee has to have been on the payroll on the 28th of February, and they have to be paid by PAYE. Those are the key criteria. It applies to all employees, any type of employee. Version 2 told us good news that it also applies to the PAYE remuneration of salaried directors. They can be furloughed, but they must only do statutory duties and there must be a written board resolution in place, a written board minute. Statutory duties means things like filing the accounts. It doesn't mean what I heard this morning, which is attending BNI, but it's okay as long as you don't ask for referrals. That's the wrong side of the line in our view. Office holders, if anyone wants to know what an office holder is, I'll tell you later. Agency workers are covered, and there's specific guidance for contingent workers. Nannies and cleaners are covered. Apprentices can keep training, but you need to top up their pay to the national minimum wage, because by paying them 80%, it brings them below, and that's fine as long as they're not working, but when they are, it needs to be brought up again. Salaried partners of LLPs, again, the PAYE, part of their remuneration, fixed term contracts, and they stuck in last night also foreign nationals, so fairly obvious, but that's in the new guidance as well. If a post is funded by the public purse, it cannot be furloughed, and that's a real challenge for charities, particularly where they top up core funding with a bit of grant. Potentially, they can't furlough that person even though they haven't got enough funding to keep them going. So that's a bit of a loophole. You can also, if somebody left you, they were on the payroll on the 28th of February, but they left you for another job, say, and that job's fallen through, you can bring them back and re-furlough them, but you don't have to. It's entirely at your discretion. There's a lot of political pressure around this, but you can do it if you want. There are some risks that you might want to think about though. So working elsewhere, this was not in version 1, but was in version 2. So your employees are allowed to go and get another job whilst furloughed, if the contract allows. This is a little bit controversial because it means that they could be getting an 80% bailout from the state and then go and get another full-time job somewhere else. One would hope that could only really be essential roles supporting the national effort at the moment. The guidance says it is where the contract allows. So many employment contracts will and should have what we call a hold time and attention clause. So this is the clause that says you can't go and get work for anybody else without our permission. If you've got that in place, you then have the choice whether to allow them to have a second job or not. And you might want to think about things like, what if they go and get contract coronavirus? What if they aren't available to return to me when I want them because they've now contracted with somebody else? So things like that are things to consider. If you haven't got that clause in place, then there's nothing to stop them going and do it. Rotation. So again, version 1 didn't tell us anything about rotation. We assumed it was allowed. Version 2 confirmed it is. So what that means is that to be eligible for reimbursement under the scheme, your employee has to be furloughed for at least 3 weeks. So not an absolute 3 weeks, but at least 3 calendar weeks. You can, after 3 weeks or more, you can then unfurlough them and then refurlough them, getting agreement for a second time. That would work where, say, for example, you've got 4 employees, you only got work for 2, you want to be fair to everybody, so you furlough 2 for 3 weeks, they come back and the other 2 go off. So that's quite a nice little device for a number of businesses. I've just mentioned agreement. I am really worried that there are lots of businesses who have told their employees that they are furloughed but have not secured agreement. The scheme specifically requires written agreement from every employee. And if you haven't got that, when HMRC come along and do the audit, and they've given themselves, as you'll see here, 5 years, you've got to keep a record of that agreement for 5 years, you risk having to pay back all of that furlough money, which could be catastrophic. So they're not asking for a copy of the written agreement, I don't think, when you make your claim, from what we now know, looking at Carrie, there's nothing to indicate that, but you do risk that on audit. So furlough agreements, we've been providing lots of those. They need to agree to it. Email's fine, but keep it for 5 years. Pay, so Carrie said I mentioned this, so a few things that we know about pay. Commission is included if it's contractual. So you've got a contractual commission scheme in place, that will be covered for reimbursement. But if it's a discretionary scheme, discretionary commission, discretionary bonus, these things are not included. We know that Non-monetary benefits are not included, so things like health insurance, private medical insurance, company cars, they're not included. Tips are not included in hospitality. Interesting one is the salary that you'll be calculating on is whatever the salary was on the 28th of February. So very cleverly, the Treasury have avoided having to pay out on the increase to the national minimum living wage on the 1st of April. So that surprised me, but obviously brings down the cost of the public purse. It also means if you've had pay rises with your employees since, then they're not going to be reimbursable. You do have the option, the scheme provides for 80% of pay to be reimbursed. You do have the option to top up to 100%. So that's something, if you can afford it, you might want to do. What I wouldn't do is do that if you're furloughing some and not others, because otherwise you'll have people at home on 100% and people at work on 100% being fairly peeved that they're having to do all the work. So be aware of that. You can reverse salary sacrifice schemes, so long as you get agreement from the employee. And you do continue to deduct student loans and apprenticeship levy. There's also, I've not got on this slide, but there's detailed guidance in the scheme on how you calculate the pay for people with variable hours, the 0 hours, casual, bank, all these kinds of people. So have a look at the scheme and it'll give you more detail on exactly how to do that. Other bits and bobs. There isn't a section in the guidance called other bits and bobs, but here are some other bits and bobs. So you can't use it to replace redundancy payments. That seems to me to be fairly straightforward and obvious, but presumably some people have thought you can. You can't, one of the things they've explicitly put in the scheme last night is, as an employee, you can't deduct an admin charge for processing the reimbursement from HMRC. So they've obviously heard that some unscrupulous employees were thinking about doing that. You can furlough people for caring responsibilities. So explicitly, it's the only part of the scheme that says you don't have to be otherwise making someone redundant in order to furlough them. If they've got caring responsibilities like looking after the kids, that in itself is a valid reason for furlough. You can organise volunteering opportunities. So that was new in version 2. What they've put in overnight in version 3 is that can't be for what they've called a linked or associated organisation. So already knew you couldn't volunteer for your own organisation, because otherwise that would be very open to fraud. They broadened that out to a linked or associated organisation. So for example, if you've got group companies, you couldn't be furloughed from one and then go and work in another bit. Or if you've got a charity with a trading arm, you couldn't, again, just swap over. But they've taken it to this thing called linked or associated companies. I've no idea what that means. To my knowledge, that there's no legal definition of that, and Carrie's
No.
the same thing. So the intention surely is to prevent fraud, not to prevent social responsibility. But just be aware that, in 4 years' time, when some self-employed commission-based HMRC agent comes along and does the audit, just make sure you've got clear documentation, you were the right side of the line. TUPE is covered, so it wasn't until last night. So that was a technical gap, because if you weren't on the payroll on the 28th of February, then you wouldn't have been covered. If your employment transferred since then you are now covered, which seemed to be sensible. There's a big new section in the guidance overnight on sick pay, and they've now said, and I'm really pleased about this actually, what the original guidance says was if you were off sick, it didn't even say with coronavirus, but if you're on SSP, you couldn't be furloughed until the sickness ended. And that meant for an employee, they'd be on £94.25 because they happen to have coronavirus or symptoms of, rather than being on 80% of their pay, which the rest of their colleagues have been furloughed were on. They've removed that now, so you can move somebody from sick onto furlough, but you can't claim both at the same time. So I thought that was good news in last night's revisions. Really, really frustratingly, they still haven't covered what is one of the biggest questions we're being asked, which is, can people take holiday whilst on furlough? They've tweeted that they can. ACAS have said they can, but the guidance, this is an HMRC scheme, the guidance is the only thing that matters. It's the only game in town for interpretation. They have not said that employees can take, if they take holidays on furlough, that doesn't break the period of furlough and break the 3-month minimum block. So the advice that we've given is, at this point in time, don't allow holidays because you risk not being able to claim. I think they will clarify it in the end. I'm just really surprised they haven't done it now. So that's a real dilemma at the moment for a lot of businesses. What we do know is that when they do clarify it, assuming they do, you can then impose annual leave. So the rules are you have to give double the notice of the leave that you're wanting someone to take. So if you want someone to take a week's leave, you can make them do that, but you have to give 2 weeks notice, for example. We also know that they're now allowing statutory annual leave, the 28 days, to be carried forward over the next 2 leave years to soften the blow of everybody accruing leave and not otherwise being able to take it. So that is questions. Thank you. A number of you have, I know a number of you anyway, obviously, but a number of you have also pinged through LinkedIn invites earlier on in this chat. So please do accept them. If you didn't get an invite from me, sorry, but please do LinkedIn. I'm pumping out a lot of content on this stuff at the moment. As many of you know, I'm doing a daily tip of the day, furloughing tip of the day. It was on volunteering this morning. And we've also got a hub there where lots of information and FAQs are being answered. So that is me. I'm going to stop the share, Neil, if that's okay, and pass back to you.
That's perfect. Thank you. So look, thank you very much to both Carrie and Ian for sharing an awful lot of information. I know both of you guys have been working tirelessly for the past 4 weeks as new information is changing every single day to help share that with people. So we've overrun slightly. We don't have time to go through all the questions, but what I want to do is just pause. And from my first seminar, I talked about the importance of making the right changes now in crisis management. There was an article from BBC News last week, and it said the surge for business closures is not yet it. So we've seen the big names that have gone into administration. They anticipate up to 20% of small and medium businesses will go out of business in the next month. So that's looming, and it is cash flow which will put them out of business. So that the ask for you all is to look carefully at what you are eligible for, claim whatever you can claim, model your cash flow out, cut your costs where you can, and basically put off and protect yourselves from that initial crisis. So if you can get yourself to a position where you know you are okay and not going to go out of business, and we know some of this government money is coming later, so there's still a short-term cash flow issue. There are, as Carrie talked about, the banks are meant to be helping us plug that gap with some loans. So that's the first port of call. If the government money is going to help you, but in a couple of months' time, then get some loans in the short term to do that. The banks, as with everyone else, are inundated, so things are taking a little bit longer, but they are doing their best. But work with your accountants and bookkeeper partners on that. Lots of people are happy to help out right now, so leverage the people who are prepared to help you get through this process. Just a couple of questions I want to touch on. So I guess I'll use one as an example for me. So I'm the director of an SME. I just happen to be the owner of my own business. So I furloughed one member of staff, and that's great. I've got the paperwork, so that's good. They're not doing any work. I am still working the business, so I can't furlough myself. Other than applying for a loan, is there anything else I can get ineligible for, or is that the lot for me?
Well, given that I know that you don't have business premises, I'm going to say, yeah, that potentially is all you can claim for.
Okay.
Although they're still lobbying for owner-managed directors and dividends, but yeah, who knows?
And then the second question. So this is from one of our colleagues on. So they're a sole trader. So they're eligible for the self-employed piece. They've also got business premises. They're eligible for the non-domestic rates. Are they eligible for both, or do they have to choose one or the other?
No, they're eligible for both. They're eligible for both.
Perfect. So in terms of questions, I thought that might just help cover the basis for a lot of people here. The key thing for me really is around is the not working the business that Ian made the point on. I think is really important. So as a director, if I were not working on my business, I could furlough myself. We know most directors only take a small income, and in reality, I think, like myself, most owners probably carry on working on the business because it's kind of our business and that's what we do. But so it's just being aware of what's available. My counsel is anything you're eligible for, I think, claim. I know some people are saying, oh, I shouldn't claim too much. The government's put it there for a reason. These are tough times. Stage 2, which we'll come on to next week, around stabilisation, the point of that is looking about how we start getting back into business. So actually, how do we start getting cash moving back around the economy? And that's all of us actually starting to do work that we're selling and also starting to buy from one another again. But we have to get the crisis alleviated first, and then we can look about how we can start getting that money moving back round and actually having an income coming back in as well. So that's what we look forward to next week. I wish everyone a great Easter. As much as we can do that in a lockdown scenario. We're still having an Easter egg hunt in the garden, so I hope you're able to do much the same yourselves. And I look forward to catching you again next week. And finally, a big thank you again to Carrie and Ian.
Cheers, everyone.
Thank you. Thanks, everyone.
Bye.